Hey, everybody, welcome back. My name is Deborah Peters, and welcome to the Deborah Peters Show. It is absolutely a pleasure to have you join me today. You know, I always like to have conversations about money. And before I get into introducing today's guest, who happens to be an expert on money and the accumulation of wealth, I wanted to share a little bit with you about why this show runs and what I hope it delivers to you. We cover 5 pillars: wealth, health, relationships, success, self-expression, and business. And health is, in my opinion, I put that at the top of the list because if you don't have your health, you really don't have anything. And if you don't have good health, then there's something out of alignment spiritually in one or more areas of your psyche, of your life. And you got to get that addressed so that you have the energy to do the things that you want to do. And then, of course, wealth comes next because, well, not only does it rhyme, but most importantly, because it is a connector to our health. And everything is connected. There's no separation or isolation of these different pillars. They really are all one. And most people go through life compartmentalizing, which is probably the thing that makes them the most unhappy, you know, because they're in denial about some areas of their life, but yet they're all over their game on one particular area, maybe because it's easier, maybe because they've got some data points that are working for them. I don't know. But look, if you're overlooking different areas of your life, then you're just not going to be fully happy and truly fulfilled. I'm not talking about balance. I don't think balance exists, frankly. I think it's a false narrative that we are fed that keeps us chasing something that doesn't really exist, because you're gonna and multitasking is dead. So with that said, you just want to dial in your focus and go after what you want in life, and just kind of like give the focus and connect the dots between all the different pillars, and you'll see things truly come into alignment. So that's my point. That's why I launched this podcast, and I want to thank you for sharing, liking, subscribing, and definitely commenting. That's what really gets the algorithm busy paying attention to me and gets me out there to more people. So thank you. With that all said, my guest today is Mick Heyman, coming all the way from sunny San Diego. And, I don't know if you know this or not, Mick, but I'm a bi-coastal girl these days. I kind of decided I needed a little bit of a break from full-time Cali, but happy to have you on board. And I just want to thank you for being here. I know we had a really good pre-show chit chat. So what is it that you want people to take away from today's show? Let's start with the end in mind.
Well, thanks. And first of all, Deborah, I'm really excited to be on the show. What you do is fantastic. And the first thing is that your pillars, I think, are great, that you give people the diversification of things that we need to have in our lives to be happy. And what I found, I've been in the business for 40 years, and yet, through life experiences, through experiences in the stock market, it does all blend together. I've had fantastic experiences from the market that helped me in my life, and vice versa. Things that happened in my life, I thought, oh my gosh, that's an answer there. And so our lives do blend together, and most of it is from our experiences and oftentimes our misadventures. There's a great writer back in the 1900s who always said, every time you lose, every time you have a bad experience, it's your tuition payment. You can waste your tuition payment, or you can accept the lesson that it brings. And so that's if I had a one main theme to bring to people, it's pay attention to our experiences, and it can teach us about money, and it can teach us about life.
Yeah. And, I just want to kind of pause here for a second, because I want to say a shout out to the the people from my LinkedIn that are joining today. And, Cliff and Joseph, you guys are great. Thank you so much for being here. I get comments, pretty consistently now from them wanting me to, I don't know what they're wanting, but the question or the statement is regarding God and our Creator and Jesus Christ and where that all fits into this. And I just want to tell you guys, it's like, if you really truly follow me, and I mean truly, like watch all of my shows to the end and pay attention to my posts online, you will know unequivocally that I am 100% aligned with my Creator. I have a deep and meaningful relationship with God, and whatever topic I cover never leaves that out of the conversation. I may not put it in the heading or the title of the show, but I can promise you it is always inherent, because that is how I run my life, and it's how I deal with my reality and my existence on this planet. So thank you. I just want to clear that up, because I'm getting messages from them now, and I don't know, they kind of feel a bit adversarial. What about our Creator? Where does he fit in? Well, I don't know, Cliff. Where do you think he fits in? It's up to you, babe. You can fit him in wherever you want. And I don't mean to be sarcastic, but I don't like you coming at me like that. So find a new approach. All right. So I just tell it like it is, Mick. I just don't mince any words. But on that note, we're talking about experiences, right? Which you have a very valid point. What's interesting from my approach is, experiences are kind of like, they're like the symptom. They're the symptom of something greater. And so, to these gentlemen's points, I'll just post the comments here so everybody can see. God is my supply. And my supply doesn't rely on people. And when I learned that, my money shifted. And I really feel like that plays in directly with our psychology, right? I went a good portion of my life feeling like God had abandoned me. And when I finally figured that out, everything got better for me in my life, So because it affected my psychology, it took me out of a funk, and where I felt alone and just like, I don't know, what's worse than feeling alone? There's a difference between, I guess, between lonely and alone. Like if you really feel alone, it's like, yikes, you've got some personal growth work to do, spiritual maturity.
Well, and I guess to their points, if you have a spirit that, whether it's God or the Creator, however you want to determine it, if you have that in your life, you're not alone. And oftentimes it's all of us have a different, all of us are looking for that, right? I believe.
I think so.
And yet all of us are going to find it in different ways. But that's kind of the amazing thing, is that we have this thing in common, and yet we all have a different path to finding that togetherness with our
no right
Creator.
or wrong way.
There isn't. And then there's faith in that it's our Creator or God that presents us with experiences to find that togetherness. And it takes a while, because oftentimes we look at our experiences and we complain and are afraid, and we're thinking, oh my God, why is this happening to me? And well, it's happening to teach us to I think oftentimes to get in touch with our Creator, with our God. And anyway, it's far removed from sometimes when I think about the stock market, but oddly enough, the stock market can teach us about that too, because the emotions of money and the emotions we feel when our money is either taken away or growing like crazy, that's God helping us learn about our life. And
Yeah,
so
and
anyway,
money. I think the concept that the money is the root of all evil is probably the biggest false premise that exists. Money is not the root of all evil. Um, Money is a tool. Money is just a tool, and it's a tool to get you experiences, to get you where you want to go, to be able to have the resources to build your business and hire people and expand. And it really just comes down to your values, don't you think? When you're really aligned with your values, and you have a really good relationship with God, like there's no compartmentalization there. It's
that's what
all
I
this like
found.
moving, flowing energy.
I think that's been my experience. And the people that I've worked with, some of my current clients I've worked with over 30 years. And I've seen exactly what you're saying. That none of them actually tried to become wealthy. It just was
Right.
part of their life. It was part of their whole scope of what they did was to save, to invest, to not worry when things were bad. So many times when
Trust,
when
faith, right?
that's right. And so and it's a funny thing with one of my older clients. We never we ne- She had such huge gains in her stocks. We never did anything with her stocks. She just wanted to spend her income and give it away. That was
Yeah,
her premise. I've got enough money. Make sure my retirement home is paid for, and I want to every week. And I was a young kid at that point. I was 23 years old. Every week I'd show up, have some very soft meat with her for dinner, and then we'd go up and write checks. And
that's
that was her thing. But the funny thing was, so with her portfolio, we didn't do much of anything. We called it our strategy of benign neglect. We were
that's
paying
awesome.
attention to her, and guess what? At the end of the year, of course, there were portfolios we would trade and do a bunch of things with. Guess who did the best? Eloise did the best. By doing nothing, and so it was a great lesson for me, which it took many years to kind of filter that in my brain, that oftentimes we try too hard. We try too much. Be
Well,
like
we're
Eloise.
we're overly invested in it having to look a certain way to be right.
Hmm.
And
Exactly.
so, for example, how I start every day is I have a morning routine that includes uh, 10,000 steps, where I'm having my mother nature fix, just appreciating the trees and the air on my skin and the birds chirping. And to me, that's all God.
Yeah.
And
Yeah.
then I come home and I meditate, and I have a prayer I say. It changes from time to time. And I put some intentions down in my journal. And the last thing I always have in that exercise is, okay, who can I be of service to today?
Mm.
Thank you, God, for guiding me in that direction. And then I go about my business from a place of being in service, not from necessarily, how much can I make today? How much revenue can I generate? Although, um, you know, start with the end in mind, build it and they will come. It's really critical that you have clarity on the growth it is that you want. I mean, we are not designed to be impoverished. We are, there's nothing spiritual about poverty. And so what's interesting to me is just like looking at these belief systems that have us kind of hijacked around money. And for some people, they never want to talk about it. And I was sharing with you before we started the live show about my growing up. We started out with like no money, Like we were bankrupt, and literally
Wow.
the bank was going to take our family farm. And I don't know, somehow by the grace of God, my mother talked them into letting her give it a whirl. And so within 15 years, you know, she retired super wealthy. But in that time frame, she didn't teach me what she was learning or mastering about the use of money. In fact, it was like this taboo subject. You know, we just couldn't. You just didn't ask the question because she got extremely offended and defensive. And it's like, well, I really didn't know anything about the use of money, you know, any of that. And so I kind of, you know, I went out into the world on my own with zero tools around money, and not just zero tools around the management of money or the acquisition of wealth, but moreover, completely hamstrung by these limiting beliefs about money that, you know, you never talked about it. It was hush hush. It's none of my business. Well, how are you going to learn as a child going into adulthood how to, you know, take care of your own money if it's like this really negative conversation in the family?
No, it's difficult, and imagine everyone comes from a little different background. Some people may just never have heard about it. Other people, like you said, poverty, you know, there's nothing spiritual about it, and so, and but people, you know, come in with all kinds of beliefs, and in the end, if we just accept that money is part of our life, it doesn't have to dominate us. The same thing, the opposite would be just as miserable, wouldn't it?
Yeah.
Say your mom had been someone who made money and was saying, this is the way to be happy. You would have
Yeah. The
come in
only
with
way.
a
Yeah.
completely different. Actually, I was at a signing the other day, and a guy walked up with his son. His son was about 2 or 3 years old. I mean, really, barely could talk. And the father was so proud. He said, "You tell Mick what you know, 2 ways of making money." And the kid smiled at me and he says, "You work for money or money makes money." And the dad was patting him on the back, and I mean, here's going to be another I don't know what, but at 10 years old, he's going to be either a fortune guy, or he's going to be, you know, knocking everybody in the neighborhood around. But I just thought you ought to have some, you know, I don't want to overuse the word balance, but if you push money down people's throats, that's as limiting as it is by preventing people from learning about it. And then you go out and imagine you're in your 20s, you had to kind of fend for yourself, and we all do. We all have these limiting beliefs somehow. As good a, you know, some people have the most wonderful parents in the world, but in the end, you have some limiting beliefs that you have to deal with at some point in your life, or you're not gonna find that peace, whether it's
Yeah.
with money or with your relationships, or something else.
Yeah, and so that's a, you know, a good sort of approach to it all in terms of the correlation between the quality of our relationships and our relationship with money. You know,
And
I've heard it said that love and money are the same vibration. What do you think about that?
I, I actually very much agree with it. The funny thing is, in the book that I wrote, a couple of the relationships were very instrumental in teaching me lessons about money, and letting go. How hard is it to let go of a bad relationship? How hard is it to let go of a investment or something? You know, it it's because it plays on your emotions. It's a funny thing, when I was in college, my worst subject was economics, and in particular statistics. And I remember the statistics professor, you know, hold me after the, you know, he put his arm around me after the midterm, and he said, "You don't know much about statistics, but let's figure out the odds of passing this class." after
Aw,
this midterm. He said, "The
yeah.
drop office is over here, young man." But what did I love? I did eventually pass, but what did I love? It was Russian literature, the emotions, the power of the
Mhm.
people that were going through the different stories. And the funny thing is, after working in the market, I thought, what taught me the most? It was the Russian literature. It was emotion, psychology, philosophy. It all plays a part. And if you don't accept that, however you go into the world with your money management, it's gonna get you. It's gonna because it's gonna play on your emotions. Whether it's the pandemic or it's different events that come as a surprise. If we
I
don't
guess
deal
that's
with our
why.
emotions, yeah, go ahead. Sorry.
No. I was just thinking, like, I guess that's why people that have had, massive financial losses, you know, uh, do something really bad to themselves or commit suicide or just like, and it's like, here's the thing though, once you have the neurology, like the pattern, the belief pattern, the thinking patterns, the emotional patterns in your neurology, like in your makeup, your psychology, then repeating that is not that difficult.
Absolutely.
I think it's the
And
building it the first time that's the hard part. And then, once you build it and you're familiar with what worked, what didn't work, then you can be like, okay, I've created a model for this. And if something happens to your what you've created, the storehouse of money you've created, the success, then it's like, well, I'll just rebuild it. And it probably rebuild it faster because you don't have to stop and figure it out. You've already done it.
And you've dealt with what the fear can be, and you've also dealt with hopefully the fear of missing out, that emotion. Think
Yeah.
of, I mean, every day we're presented now with people who have made a lot of money or people who have lost a lot of money, and there's all these experts every day telling you how to make money or do something, and it really is important that each of us figure out, as what you said, figure out our method and then stay true to that and turn off the noise,
Yeah.
because the noise is only going to distract us. Whether one day it's the meme stocks and the next day it's cryptocurrency. And believe me, another one is coming around the corner, and maybe Beanie
Sure.
Babies will make a return, but
Cabbage Patch Dolls. Yeah.
there you go.
Yeah.
Um, but there's always going to be a distracting thing, and we have to stay true to ourselves and stay true to that plan. That is usually not as exciting as the next best thing.
So, with that said, that opens up a whole other can of worms. What I have to ask this, and I'm not really sure how to ask it. When it comes to Wall Street, are things really done like trades and investments? I mean, are they on the up and up, or is everything manipulated? I guess that's what I'm trying to ask.
In the short term, I don't believe it's manipulated, but I do believe that computer models and hyper trading by massive amounts of billions of dollars that go in every day. In the short term, it's whether it's manipulated or it's just impossible for the average person to deal with. It doesn't matter. It's impossible for the average person to deal with.
Right.
And the funny thing is, today it's computer trading and something else. 100 years ago, it probably was manipulated. So, is it different than it was 100 years ago? I mean, it's the world's different if you look at the technology. Is it different because in the short term, the average person can't do it? It's the same. But the
Got
funny
it.
part is, if we all of a sudden zoom out, take our lens away, and say, we don't care about the short term. Let the computer models do what they do. Let the manipulators, if they are some, do what they do. I'm just a long term guy. I'm just there for the long term. Then if the computer models blow some stock that we like down too far, good for us. We get to buy it a little bit lower. If
Yeah.
it runs crazy because the manipulators or whoever it is, and maybe it's just the computer models are running it too fast because the Fed said something or did something on the short term, that's an opportunity to maybe take a little profit. And so if we think we're going to out trade that, I think it's, at least for me, it's a losing proposition. I
Sure.
learned, and there's an experience. I tried hard. I really wanted to be a great trader. I wanted to be one of those, people talking on Louis Rukeyser back in the day or whatever. But that wasn't me. I'm a long-term guy. That's my makeup. If you're a trader, you probably can learn some of these models and figure it out. But for me, I'm a long-term investor. And if you're a long-term investor, you don't have to worry about all the craziness in Wall Street. You just take
Right.
advantage of it.
Yeah, yeah, it's a good point. I mean, it's got to be the marathon that gets you where you want to go, not the sprint, right?
For most of us, the average person that I've worked with, if they just put a little bit of money away each month or each paycheck or whatever and invest it slowly over time and don't get too excited, and you've got to figure out what it is, how much you could have in the, say, the stock market that wouldn't scare you if things go down.
Right.
So you figure out, and each person is a little different there. Some people could have 100% in. I couldn't. That would scare the heck out of me if it
Yeah.
goes down. So I'm more of a middle and ground person, but each person I've worked with is a little different. And you figure that out, and then you can stay true to that plan. And then you can be more like Eloise and kind of set and forget and don't worry too much. That's to me the way to peace with money. If you're into oh my God, what's the Fed going to do? How's
Yeah.
this war going to affect us? Oh my God, this and that. It's gonna act like crazy. And you know what? The traders, I think the really good traders in the market, they're not worrying about that stuff either. They've got their own little computer model to do it.
That's true. And I think that anytime in any part of our lives that we're in reactionary mode, we're really setting ourselves up for massive stress, because if you're going in for the short haul and you want an immediate return, then you have to deal with the pressure and the stress of, when something doesn't work. I got to plug this in because I have a train going by, and there we go. I got to mute it out. And, then it just is like, puts you in a place of uncertainty where you can't relax about it. And the minute you can't relax about something and you start white knuckling it, whether you're closing a deal or, working on an intimate relationship, whatever it is, right? Even if say you have a health challenge, the minute you start like constantly focusing on the health challenge, then it takes all the joy out of the rest of your life. So you have to find a way within yourself. You have to know your own limits. You have to know your own resiliency and how much you can really roll with the punches to be able to know how far to go into the deal.
No, that's right. And you're right, with a health challenge could be the same. You could
Yeah.
apply that same concept. What's my plan? What's my objective? What am I going to try to, and in the end, it goes back to the person that wrote that first thing. You accept that God, is he knows what's best, and we don't,
Right. Well, we have our conscious mind is limited to 7 thoughts plus or minus 2. So somewhere between 5 to 9 thought patterns. They're actually bytes, but let's say thought patterns, BYTES. We have a tendency as a human being to just kind of roll around the same kind of orbit in our thoughts, in our emotions, and then our behaviors, and then wonder why we're not getting different results, So it's really important to have, I think, some kind of a personal spiritual routine. It doesn't necessarily mean going to church. It's like you can do this on your own anywhere, where you really, have a relationship with that part of you, that's that super conscious part of you that enables you to receive that guidance from God on a consistent
Yeah,
basis.
I think I'm not, a top of the mountain meditator or anything, but what meditation taught me, which I learned kind of after 9/11, um, is that we're not our thoughts. I mean, I always
Thank
thought you had to
God.
quiet your mind. Yes, thank God.
Thank God.
I always thought that you had to quiet your mind, and the teacher said, no, thoughts are going to come in your mind, accept what they are and let them move along. And all of a sudden, even if it was something terrible that was going on in my life, you sit there for 5 minutes and you can't think about something that long. And then all of a sudden you're drifting off. And I thought, wow, that was just a thought.
It's just a thought.
That wasn't me. And so you're right. And if we can accept that, and all of a sudden some peace might come over you or not, but that sitting is what really taught me exactly what you were saying.
Yeah, and I insist pretty much to all my clients that they get that rolling as part of their ramp up to the day, and basically just make it a part of their business model. The first appointment of the day is that sit down. It only takes 15 minutes. I mean, it's just a
Yeah.
really small price to pay for a 24-hour period of feeling better about yourself, right?
And imagine, I bet my guess is a lot of those business people are turning on CNBC or Bloomberg in the
They
morning.
are.
If
First
they
thing in
could
the morning.
replace that 15 minutes of Bloomberg with some meditation, not only I think they'll do better business, but they'll be happier doing it,
Yeah. Well, yeah, because here's the deal. It's like when you sit down. Well, let me give you the antithesis first. So let's say you roll out of bed and, whatever it is you do, bathroom, coffee, I don't know. And then you turn on your devices and you pull up a screen of some sort and you turn on some news channel. Immediately, you have just surrendered all of your power to the outside world.
Yes.
All of it. It's gone. It's gone for the whole day. And it leaves you all day long, kind of like led around like you have a fish hook in your mouth. And
Yeah.
you're just like willy-nilly all over the place, reacting. Buttons are being triggered, and you feel like the world is happening to you, which totally plays into our societal's program around convincing us that we're victims, that we're powerless.
Yes,
The
absolutely.
Right?
Oh, go ahead.
The flip side of that is, you get up in the morning and you don't engage with anybody. So get up before your family and you sit down for that 15 or 20 minutes and you give yourself that moment to just go inside, connect, anchor in. Now you're in charge of your energy, which means you're in charge of the universe. And what's the only thing that's going to resonate with you throughout your day is that alignment. And anything out of the peripheral that is trying to convince you that you're weak, that your thoughts are real, that the only reality that exists is all the hardship around you, and it keeps you from actually creating the next experience or set of experiences that you'd like to have, because you can't focus on them. That focus is gone. Like you're in charge, and what you are seeking is seeking you. So when you're in charge of you and you're in alignment, then that has to come to you throughout the day. Now, I'm not saying you're gonna 20-minute or 15-minute meditation in the morning is going to last 24 hours. I mean, you might not even make it till breakfast.
But I will say this, if you can practice that, imagine there's some trigger that you would have listened to in that first 15 minutes that you would have some headline, and in my case, maybe it's some market thing or the Fed talked or who knows, some earnings report. But say you did the meditation, you walked away, the same report that you would eventually hear anyway in 25 minutes after you're done with your meditation, that same thing I believe would have a different effect on you if you started with that meditation in the morning.
Sure.
And as opposed to when you're waking up and it's a shock, and then you go through that whole day with that shock.
Yeah.
And it's just, what made me think of it is, my ex-wife and I used to joke about this. We'd get in some argument or something, and one of us would look at each other and go, "We're hungry, aren't we?" Well, the same thing that got us in that argument, once we were fed, was nothing. And so it's, that goes back to your 5 pillars. If you're working with each of them, then the same thing that might have gotten you out of line doesn't get you out of line.
That's right. Yeah. 100%. And the more you do it, like I always say to my clients that are resistant to this change, I say to them, listen, you don't have to prove anything to me. You just prove it to yourself. You give me 21 days of a morning meditation, and then you come back and you tell me how your life looks. And if they're willing to do it, and that's a leverage thing, like how bad are things? Usually it's dissonance that gets people to make that kind of a change, right? Do you see that with how people are managing their money or their investments, that for them, do they make change based on dissonance, or do they make the change because they have something to move toward, or they have goals or objectives that they want to accomplish? Like, what do you find is the biggest driver?
I think that most people at some point early on, whether, of course you had your story with your mom, but each of us usually had some painful experience with money. And when they finally got to me, let's say, they were typically very skeptical. Well, my last manager did this, or someone else did that. And it takes a lot of time. And I remember one fellow, he had a terrible experience, both with technology stocks and then in the financial crisis. And so each time, once we set his objectives, each time there was some issue or problem going on, he'd write me and say, well, what about this? And what about that? What about this? And I'd say, well, let's go back to your objectives. How much could you lose if the worst case happened? And he said, okay, I think I could take that. And he'd relax. And now, like recently, he wrote me a note. He says, I know what you're going to say. I'm okay, but I just want to, get this out there. And so we can all practice this peacefulness, exercise that you're talking about in all parts of our lives. It could be in our relationships too. But it takes time and practice, and it takes these events. When we don't know the next thing that's coming around the pike. The pandemic was awful for us, but is that the last thing, or what's the next thing? It surprises happen out of the blue, and even in whether it's in our lives or in our portfolios. My recommendation is, we don't all build bomb shelters,
right,
but have it in our mind of how much, if something weird happened, could we take and not panic?
Yeah, to not be triggered. So basically, you're helping them reframe any sort of like fear-based response mechanism that they might have in advance of something based on a past experience in their timeline that's basically planted a trigger or a negative anchor.
And I think the longer that they've done it, someone asked me, I think it was during the financial crisis, oh God, are your clients calling you up all the time? And I was joking because 2 people had just called me up and said, Mick, are you okay? They're worried about me. And believe me, my stomach was churning like everyone else's, just because I'm passing on this kind of, advice of calmness doesn't mean I'm churning too. We're all the same. We all feel it. When something bad is happening, it's how do we deal with these emotions is the difference. Is if we accept that this isn't the end of the world. This has happened before. That's the other education I had.
Yeah. And it's cyclical.
It is. Life is. And imagine our grandparents and our great grandparents and before them, they've all experienced these ups and downs. And we're not, in today's world, we always want to feel like we're special and we're different. But
We do.
emotions haven't changed for millions of years. There was a great book, I can't remember who wrote it, called Sapiens. I don't know if you wrote it.
Oh, wow.
Anyway,
No.
and he made the joke at some point. He said, somewhere in caveman times, there is some snotty little teenager complaining to his mom and dad. That happened millions of years ago.
Yeah.
And it's kind of funny for me to think about that one of my early education was actually, I had to go to the library and get a bunch of data from the early 1920s all the way up to 1980. And just reading the headlines every week, and you thought, oh my gosh, the world was coming to an end. But I knew there was next week's paper coming out, and it's always been like that. It always feels like it's the end of the world, or it's fantastic. And imagine the market when it seemed like the end of the world, all of a sudden would start going up. The
Oh, yeah.
worst
The wheel
headlines are always
turns.
at the bottom.
Yeah.
Exactly.
The wheel turns. There's this really cool meme out now that says, like, if you're going through hell, keep going.
Exactly.
Yeah. I love that one. So I have a question. Oh, go ahead.
No,
Yeah,
you go ahead.
Well, I was just going to ask for clarification for the viewers to be able to connect with you as clients. Are you more of a investment advisor, like you're walking them through the steps with stocks and whatnot? What would be your official title?
So it's always changed, but I'm an investment advisor. And
Okay.
I'm basically managing money for clients. I'm on my own. I have my own. It's Heyman Investment Counseling, and
Good for you.
and because I'm on my own, I can't take that many more clients. I don't want to say I'm tapped out, but I believe in, you got to know your client and know the objectives and take care of them. And so that was actually the inspiration for the book that I wrote. I thought, well, I've got these lessons. I'd love to spread it around.
Yeah. Hit more people.
And I don't need to, I don't want, so this is the opposite of a plug. I can't take clients, but I wanted to pass this information around. And the funny thing is, I love the book that I wrote and such. And I think it's kind of a funny, it's not a textbook type of thing, but getting on your show and talking to people from all walks of life, it's almost like the tail wagging the dog.
Yeah.
I'm thrilled that I get a chance to talk to people today and pass on. If someone got help, that's fantastic. So
Yeah.
I'm happy to communicate with people and everything like that. But it's really through people like you, who I think are doing an amazing job of helping people through these podcasts.
Ah, thank you. Thank you. So, I want to talk about your book, but first I've got a couple questions. So let's say, I guess one of my pet peeves is, and this may not even apply to you, but I just want to say it anyway. This is my rant. Oftentimes with, say, a financial planner, they sit down and they do a diagnostic on your finances. And, obviously the key to no stress living is to live below your means, obviously to pay out less than you bring in the door. So that's kind of a no-brainer, although a lot of people don't perhaps realize that, but I learned that the hard way through pain. Like I had more days at the end of the month than I had money. And but the thing is that sort of was my pet peeve, is that when they sit down with you, they're always looking for ways to cut corners. And I see so much. I I don't know, narratives online about, cut out your latte and do your own nails. And it's like, to me, that's scarcity programming. Are they not trained to talk to people about additional revenue streams and the possibility of creating money? I mean, seriously, do you know how many millionaires there are making money off of TikTok and YouTube and like all these digital platforms that are 12 and 16 years old, and we're still like, here we are in our 30s or 40s sitting down with a financial planner and we're cutting out our lattes. So you know what I'm saying? It's just two completely different paradigms.
And I think that's the and I think too much of the time what I see from my colleagues, or whatever, not colleagues, but people in the business, is it's too cookie cutter. It's, okay, you're 22 years old, and don't cut out your latte and put 10% of your paycheck in your savings, and then divvy it up this way. And each of our psychologies are a little different. Somebody, if they're cutting out their latte and they just put $100 in the stock market, and the stock market just dropped 20%, and now they got $80 in the stock market and no lattes, they're done.
Yeah,
if you don't
because of the emotions, right?
Exactly. If you don't know the person you're talking to, you say, well, have a smaller latte, or I don't know, whatever it is. But if that's what you want, then let's figure out how to get more money. And so understand each person, and each of us need to understand ourselves. That's the problem. Is one of the things I've tried to talk to people about, is when we talk to these advisors, get them away from this cookie cutter thing.
I can't handle it. It's like
they have to understand, who we are, because we're all different. And don't put me in if I'm 22 years old and they put me in 100% stocks and that market goes down, I'm that and imagine that. Say you put $1,000 and you lost $150, but because of that, you never invest again. Imagine the thousands and hundreds of thousands of dollars you probably lose because of that first experience. So don't make the first experience so terrible.
And a lot of people drag forward those negative experiences,
exactly,
thinking they're protecting themselves, but they're actually costing themselves all sorts of opportunity, because it's one experience. There should be, I think, really, there should be a conversation around, what's your resiliency quotient?
Exactly.
If you lost this
more
money,
important than the latte.
If you lost this money, are you going to go jump off a bridge? Because I need to know what I'm dealing with here.
Exactly. And then you can joke about that. And then I had two clients. One ran for the hills because he didn't understand that. And he came from a bad experience, came to our firm, still didn't trust it. And of course, unfortunately, came to our firm like a month before the 87 crash. There was no hope, right? Mm-hmm. But another client, that right before the 87 crash, I was talking to them. It was one of my first clients. And they said, what if we have a crash? Well, somehow, how did they know? But anyway, I didn't, act on that. But I said, well, let's look at what would happen to your portfolio, given your diversification, if the crash happened. And oddly enough, 2 weeks later, the crash happens. And I have to call them up, and I'm thinking, oh, I hate to do this. And they said, gosh, Mick, the value of our portfolio is exactly what not exactly, but within hundreds of dollars of what you told us would be. Let's buy some stocks.
Oh my gosh.
So because they were strong, they had strong hands. The other fellow had weak hands.
Yeah.
And so that's why the psychology and the emotions is so important before we step into anything. And I think too many advisors ignore that part of it.
Well, I just think that I just feel like they're not spiritually mature at all, and they function from the ego, like 3D reality, and they just really don't understand the bigger picture. That's all. They're just immature.
Yes.
Regardless how old they are, which connects with some people, right?
That's right.
Yeah,
And too often that's what, and I guess like meets like oftentimes,
for sure,
but
for sure. So, one last question, then let's talk about your book. Um, what's going on with gold? And it's pretty pricey, but should we still buy it? Like, is it really the answer? Because
I,
I'm really thinking about it, and I thought, well, I'm having Mick on my show. I'm going to get
at
the inside
least what does
scoop.
Mick think? Well,
Yes.
it's gold is funny. I got in the business in 1980 and gold was magical. The
Yeah.
70s was the high inflation, and don't talk about high inflation today versus the 70s. It was awful back then. I mean,
Yeah.
mortgage rates were at 15%,
I know.
and gold was skyrocketing. And then you had it was like a bomb went off, and gold starts going down and goes down for the next 25 years or whatever. And so my whole career was based on going like, who would ever want to buy gold? It's the silly. I mean, you wanted to buy stocks,
Right.
and of course, back in 1980, everyone looked at me like, you're what kind of career are you picking? You should
Yeah.
be in real estate or gold or something. You're in stocks. That's the stupidest thing in the world. Well, of course, now zoom forward. This is a long answer to your question. Zoom forward 40 years, and I don't think stocks are terrible. I mean, I think you ought to have your allocation to stocks. But in the back of my mind, about 10 years ago, I thought gold should fit into people's portfolio. And for me, I probably have in client accounts maybe 5% in gold. So it's not dominant. I wouldn't overwhelm it. It's hard to make money. There's no return on gold.
Right.
And it's funny when interest rates were at zero, it seemed not to cost anything to own gold, because you weren't earning anything in a money market fund or in the bank, so why not own some gold? Now you got to think about, I could earn 5% in a money market fund, or I could have this gold. And so is it worthwhile having some gold just because when the market gets crazy downward, gold does pretty well typically? I think so, but I wouldn't buy a lot of it. There, is that talking out of both sides of my mouth
It
enough?
totally is. Yeah, it totally is. So I think the last time I looked, gold was like $1,876 an ounce, something like that. Is that right?
Yeah, thereabouts.
Close. And I don't know. I guess it's a tangible, valuable, what would you call it? Metal.
Yeah, and it's typically a hedge on inflation. That
Yeah,
that typically, and if you believe inflation will come back at some point in a bigger way than it is now, even, that's when gold has done well. And you think after 40 years of kind of underperforming the stock market, could gold start to go up a little more? Possibly. That's why I think having a little bit in there, I would have said 0 for 30 years. And now I say, yeah, buy a little bit.
well, that would have
But
probably been a good time to buy a few bars and stick them in the safe.
now the other thing is, if someone wants to buy gold, it used to be you only could buy the gold bars or gold coins.
Yeah,
I mean, you buy a coin or two, and even that's pretty expensive. But now, at least in the stock market, you can buy these ETFs, exchange traded funds, that mirror the price of gold. So in your portfolio, if you wanted to buy a little bit, you could buy this ETF that mimics the price of gold, and that way you don't have to hide it in your backyard or anything like that.
that's funny. I just had this visual of,
Bury it in your bomb shelter. I don't know.
yeah, being out in the backyard with a box full of gold and like digging a hole with your spade. I
Yeah, I
just
don't know.
funny.
Some people might, I always say put it in your mattress, but that wouldn't feel good, would it?
No, that would not feel good. You'd have to have a big old safe, that was bomb resistant or something. This has been phenomenal. Before we get into the book, is there anything you want to leave people with in terms of thoughts about getting rolling in the stock market and investing?
I think that there's any day is a good day to get started. Don't
Yeah,
wait for the big correction or the great time to buy.
I know.
Figure out how much you would be okay to lose. Say you buy the top. If you bought the top of every market but stayed patient, you would have done really well. Imagine you bought every time Apple made a new high, you bought a
Yeah.
little bit, and then it would go down. You would have still made a fortune. Not as much as the guy that bought the low, but it didn't matter. You would have done great. So
Yeah.
accept the fact that the market is going to wiggle back and forth, but get started, but be patient and know that it's for the long term. This isn't so that you could buy lattes. This is for the long term.
Yeah.
And this is so when you're retired, you can buy as many lattes as you want. But
Yeah.
and don't totally sacrifice. I'm not telling you to give up your pleasures, but just put a little bit in and be diversified. Don't so many
Yeah.
people want to pick one stock or three stocks that are
Or
the
one
hot
tool
thing.
in the market. Yeah.
Any stock. Imagine Xerox was a great, wonderful thing. Well, we don't use Xerox machines anymore. And BlackBerry, everyone had a BlackBerry 20 years ago. Who would have
Yeah.
thought? I don't
Yeah.
see them anymore.
Oh my God. I just, so BlackBerry came, speaking of BlackBerry came out with their last phone, I don't know, 21, maybe 20,
I've stopped
2021. I actually had one. I had two. I bought two. They were the key twos. They were the last of the Mohicans, and I bought two just in case. There was word that they were bringing out a new one in January 2023, but nada. That did not happen. And I had to give in and get a completely different phone. It broke my heart because I was totally in love with my BlackBerry. I'd had
Well,
every
you were
BlackBerry that ever
unique.
existed. Yeah.
You were unique. I still have a brother-in-law that has a flip phone, so he's proud of that
Oh
one too.
no, I'm not that archaic. I just liked my quirky keyboard.
So when I say, be willing to accept that you're going to have emotional ups and downs, but get started, put a little bit in, and work with an advisor that listens to you, listens
Yeah.
to your own unique objectives, because that is really important.
Yeah, and if I always say, like, when it comes to people and who you're going to let in to your confidential world, your private dealings, make sure you have a really good feeling about them. Like, if there's any red flags, just don't go there. And I mean, that's kind of a no-brainer, but it's interesting how many people will just submit to a perceived authority figure and just, then they get like Bernie Madoff, they get completely.
Exactly.
It's like, this guy's the greatest. It's like, geez, I don't know. To me, that'd be like dating, like it's only what, a 3-month honeymoon period. And then people's true patterns really start rising to the surface. So I would say with someone that's helping you with your investments, it's got to be like within that 90 days as well.
Yes, and you're right about the same thing. Isn't there was a great book, I think, a Buddhist book. It said, if you meet the Buddha on the road, kill him. And he didn't mean take a shotgun out. But what we're saying is, don't put anyone up on the pedestal.
Right.
Listen to people, but we're all human, and we so often treat people with, like they're God. And of course we all have God within us, but that doesn't mean to put one person above the other. And that's true in the investment world too. When you see these so-called experts, and I don't want to make fun of anybody, they have no better crystal ball than anyone else does.
Yeah, it's just a lot of marketing. Okay, so tell us about your book.
So the book is called Mellow Your Money. And the goal is, as you could expect from this conversation, is to get people to calm down and to do it in a way of what I would call fun and meaningful stories in my life, that I did not want to write a textbook. There's plenty of ways to learn about how to invest that I didn't need to repeat it. I certainly have some lessons in that book, but I wanted to do it in a very approachable way. And so there's each chapter kind of has an interesting story about my life and then how it applied to the market, or a story about the market and how it applied to my life. And it is just showing how life is intertwined like that. And so, hopefully it would be a fun read for people, but the goal is to, one of my favorite books is, not to plug him, but it's called Reminiscences of a Stock Operator. It was written almost exactly 100 years ago. And it was a great trader who told about his life and the lessons. And I believe the lessons he learned are still applicable today. And so my goal was to do something like that. I don't want to put myself up there either, but to have something that would allow people to learn through life experience. And in this case, it's my own, but also help us all learn from our experiences.
Yeah, absolutely. That's brilliant, especially around money, because it's probably the most sensitive subject that there is, really, is around money. So how can people find you, and where can they find your book?
So the book is on Amazon or Barnes and Noble or any of the major book places you can find a book. And it's called Mellow Your Money: How to Surf the Market and Build Wealth Without Stressing Yourself Out.
Well,
And my website is mellowyourmoney.com, and email me there, or I'd love to hear feedback about the book, because it's, as I'm talking about things, it would be interesting to hear how people are experiencing it.
Yeah, absolutely. You know what I'd like to do? Well, first of all, I want to just tell all the viewers to go buy the book. And, I think it probably would be a great book to give to people when they're onboarding new staff at their companies. They're young, they're out of college. It's like, here's for your journey with us. I think that'd be brilliant. Actually, I think you should probably take that to companies and just like, hey, I'll come in and I'll do this training for you, and with that, I'll provide you with this book for X dollars, and oh, I love it. You got to give me a slice of that pie, because that's
a great idea.
That's
right
a
now,
great
I'm
idea.
having so much fun with these podcasts, but I think that's the next step. So that I appreciate that.
Because they're clueless, like they don't know. I'm assuming they're clueless. So let's just say a lot of them just haven't had the education that I didn't get. It's like I had to figure it out on my own. But and then I'd love to have you back again, and maybe just take the book and pull a few tools out of it and start to unpack some of that for our viewers, so that they can get some real application from it. Yeah.
I'd love to be back anytime. This has been fantastic. What you do is fantastic. Again, the hour that people would listen to you versus any headlines or news or anything else, this is what can get people to find peace in their life, and I really appreciate what you're doing.
Thank you, Mick. I thank you, because like, sometimes people think that kind of stuff, but they don't tell me, and I just am like, am I hello? Am I reaching anybody? It's good, but so thank you. I appreciate that. It's great feedback. Yeah. So hey, everybody. Yeah, just get over to mellowyourmoney.com and get in touch with Mick. Clearly, you can tell by this interview that he's got a wealth of information, no pun intended, to offer, and can really help you with your whole relationship with money and investment. And I appreciate you being here today. Thanks to Cliff and his friend for jumping on there early so we could clarify some of the values behind the show. You guys are awesome. And do share, do like, and jump on next time and throw in some more comments. Really love it. And remember, the show's on every major podcast platform. So after this renders live, then you can find me anywhere: Spotify, Rumble, SoundCloud, you name it. So thanks so much. And remember, most importantly, stay aligned, stay alert, and stay awake.